Tonight we are talking about something small that powers our very big world. It is a metal. It is called lithium. You might not see it every day, but you almost certainly use it. Lithium is the key ingredient in the rechargeable batteries that bring our modern lives to life. Think about your smartphone. It runs on a lithium-ion battery. The biggest driver of this demand is the green energy revolution. Governments and companies around the globe are pushing for a cleaner future. This future relies heavily on electric vehicles, or EVs. Every single electric car on the road today has a large, powerful lithium-ion battery pack underneath its floor, making it go. Without a steady and affordable supply of lithium, many of our most important technologies would be in trouble. So, when something disrupts the flow of this white gold, the effects are felt everywhere, from factory floors to stock markets. So who is at the center of this story? The company is called Contemporary Amperex Technology Company Limited, or CATL for short. While the name might not be as familiar as Apple or Tesla, its importance in the technology world is just as massive. CATL is a Chinese company, and it has become the undisputed king of battery manufacturing. It is the largest producer of electric vehicle batteries in the entire world. If you drive an electric car, there is a very good chance that the battery powering your journey was made by CATL. To secure its position as a battery giant, CATL has been working to control more of its own supply chain. This is a smart business move. If you can control the raw materials you need, you are less vulnerable to price swings and shortages. One of its most significant projects is a major mine located in a city called Yichun, in China's southern Jiangxi province. This mine was meant to be a key source of lithium for CATL's enormous battery factories. The event that shook the lithium market happened suddenly, but the reason behind it was surprisingly simple. It was a matter of paperwork. CATL's massive lithium mining operation in Yichun was running based on a key mining permit. Like many official licenses, this permit had an expiration date. That date was August 9, 2025. When the day came and went, the company had not yet secured a renewal of that permit from the Chinese government authorities. Without a valid license to operate, the company was legally required to stop all of its mining activities at the site. The shutdown spurred immediate speculation across the industry. Some wondered if this was a simple bureaucratic delay, as the company claimed. Others questioned if it was part of a larger, more calculated move by Beijing to tackle what some analysts have called overcapacity in the lithium sector. Let's break down the timeline of what happened because the sequence of events is important. The critical date was Friday, August 9, 2025. This was the day that CATL's existing mining license for the Yichun facility officially expired. Company officials have stated that the suspension is expected to last for at least 3 months. This is their own estimate of how long it might take to navigate the government's bureaucratic process and successfully obtain the renewed permit. 3 months is a significant amount of time in the fast-moving world of commodity markets. For the entire fourth quarter of the year, a major source of lithium supply will effectively be offline, creating a hole in the global supply chain that other producers will need to fill. The reaction from the financial markets was anything but quiet. It was immediate and explosive. As soon as the news of the CATL mine shutdown spread, the price of lithium began to soar. On the Guangzhou Futures Exchange in China, lithium prices surged by the daily limit. This means the price rose so fast that trading rules forced a temporary halt. This kind of dramatic price jump shows just how sensitive the market is to supply disruptions. This positive momentum was not limited to China. It quickly spread to stock markets around the world, particularly benefiting lithium mining companies. One company, PLS Limited, formerly known as Pilbara Minerals, saw its stock jump by as much as 19% in a single day. It might seem strange that a major mine shutting down would be seen as good news by anyone, but to understand the market's reaction, we have to listen to what the experts are saying. One market analyst, Tim Waterer from KCM Trade, put it very clearly. He explained that this news helps to fix that imbalance. Essentially, this news alleviates some of the oversupply pressures which have been a constraint on underlying lithium prices. In simpler terms, taking a large amount of supply offline, even temporarily, helps to balance the scales. This event also serves as a powerful reminder of China's immense influence over the entire battery supply chain. The shutdown of a single mine in one Chinese province was enough to change the financial outlook for companies on the other side of the world, in places like Australia. So what does all of this mean for the coming months? The most immediate effect will be on the price of lithium. With the Yichun mine offline for what could be 3 months or more, we can expect lithium prices to remain higher than they were before the shutdown. This will directly benefit lithium mining companies who will be able to sell their product for more money. However, for the companies that buy lithium, the battery manufacturers, this means their raw material costs are going to go up. If battery prices go up, it could make it more difficult for automakers to produce affordable EVs. This could potentially slow down the transition to electric cars. Over the next few months, the world will be watching China closely. We will be waiting for news on whether CATL's mining permit is renewed. The outcome will send a strong signal about the future direction of lithium supply and prices. This single event in Yichun has served as a wake-up call, reminding us all how much our electric future depends on a steady, reliable, and affordable supply of one very important metal. The story of white gold is far from over.